Now, my main focus point today is in regards to the inverted yield curve, okay? And this is part of the growing evidence that we are, based on current policies coming out of the White House, heading towards a recession. Now, 61% of U.S. investors feel pessimistic about the market's future. And this is from the AAII survey. Now, historically, that is a good buying opportunity, except when you are truly headed into a recession. And we know historically, an inverted yield curve has been a good indicator of recession 12 to 18 months down the line. However, we know that it's not infallible. And you have the recent example as evidence. And that was in 2023 when Deutsche Bank said it's a 100% chance we're going into a recession because of the inverted yield curve. And over 2 years later, we still have not seen a recession. So the question is, are we going into a recession? Well, I think it depends. It depends on, and I've said this before Trump came in office, that there's an order of operation here. There are deregulations, there are tax cuts that could stimulate the economy. There is industrial policy that could stimulate the economy. Okay, on the deregulation and industrial policy that could spur companies going out there and investing in maybe new manufacturing, which would mean hiring employees, borrowing money, all of this that can spur economic activity. And on the tax front, obviously, if you get a tax cut or the current tax rates are going to stay in place, they're not going to expire at the end of the year, you're more optimistic about your future, you're more apt to go out there and spend. So those are stimulative efforts that most people expect President Trump to embark on at some point. Problem is, that's not really at the top of the list. Clearly, geopolitical concerns as well as tariffs have been at the top of the list. And both of those are not exactly topics that are spurring optimism throughout the economy. And then you have Doge, which is trying to cut jobs, right? Lay off people. We all know that when you lay off people, they're less apt to spend, and that is a sign of recession. And so that's the issue here. Now, you could easily flip. We know that President Trump is notorious for going from one topic and priority to another. And so you could have a fear of recession today, and in a month that could flip because he's focusing more on getting the budget done and getting tax cuts through, and all those things are stimulative or, theoretically stimulative. And so the answer to the question, is the inverted yield curve predictive of a recession? Well, maybe. Now, I think a lot of the factors that made the 2023 warning not valid remain today. Number one, the average consumer has a good balance sheet, especially if you own assets. You have a locked-in 3% mortgage at a time when you've had inflation, and a lot of people have increased their pay because of that inflation. Been able to increase their pay because of the inflation. They have cryptocurrency assets. They have equity, stock market assets that allows them to feel wealthy and continue to spend. That's largely in place, even though we've had a pullback in a lot of those things. And then you have the Federal Reserve, which still has a large balance sheet. Now, they're doing QT. They're likely to end that soon. That could be stimulative and bring more money into the financial system. And the fact that they have a large balance sheet does distort the yield curve a bit. So the signal of an inverted yield curve signaling recession is not as valid as it was 20 years ago when they had very little impact on the treasury market. So there's still a higher likelihood than not that we will head into recession sometime in the next 4 years. because of the volatility of policy. And the question for you is, what should you do? The first is focus on the bigger picture. Just as you're getting this downturn in AI and tech, there's going to be a point where there's great opportunities. Same with a lot of the cyclical names, right? If there are policies that are put in place, industrial policies to kind of spur us out of a recession, that likely will be America first. It will likely mean industrial companies do better, because especially the ones here in the United States, smaller cap companies, mid cap companies, and you need to be prepared for that. Do your research now before you have to, right? So you're forced to. Oh, the market's going up. What should I buy? Okay. Be prepared. Have your buy points. Have your companies that are on your watch list, and that get down to your price target in order to buy. So, a bear market, a recession, it's frankly a buying opportunity, and you need to be prepared for that buying opportunity.